Guys, I'm Nayantara reporting for ET now, and today I'm going to give you a big story from the startup space, the new age companies, and all of that. It's to do with Zomato. We were the first ones to tell you that Zomato wanted to buy out and was going to buy out Blinkit, a 10-minute delivery startup, which used to earlier be called Grofers, which used to sell fresh fruits, vegetables, groceries before it pivoted to this 10-minute model. And that's exactly what's happening. Come Friday, June 24th, the board of Zomato will be meeting for the amalgamation of Blinkit with Zomato. How big is this deal going to be? Well, this is where we get you now exclusive information. Zomato is likely to dilute 7% equity to transfer shares to Blinkit's shareholders. That's right, 7% equity dilution is what we're talking about at Zomato towards Blinkit's shareholders. The largest shareholder of Blinkit, which is Softbank, is likely to get more than 3.5% stake in Zomato. What we are also being told is that Blinkit has seen a significant erosion in its market valuation, significant markdown. So last year, Blinkit, formerly called Grofers, had hit unicorn status. Its valuation was more than $1 billion, and that's actually after it raised funds from Zomato as well as Tiger Global. So it hit $1 billion plus valuation. We're now being told that Blinkit's valuation is likely to be less than $700 million. The swap ratio, which has been fixed for the Zomato-Blinkit deal according to our sources, is 1:10. So for every one Zomato share, 10 Blinkit shares. And that's how this deal has been structured, and that is how, and that is why Zomato has to dilute nearly a 7% stake. Zomato couldn't have been more vocal about the fact that it believes quick commerce is the future of Indian modern retail. In one of the earnings calls, Zomato had made it clear that it was earmarking nearly a $400 million investment when it came to quick commerce. Having said that, before the IPO, before Zomato's much publicized IPO, it had invested in Grofers, now called Blinkit. I was just talking to you about that, taken a 10% stake. At that time, it didn't go, and at that time, there was also Tiger Global. After that, Zomato has also extended a lifeline to Blinkit. It did so with a loan of about $100 million plus, which was at a coupon rate of 12% per annum. That's the interest rate, 12% per annum. We've not been able to ascertain what happens to those loan tenants, etc. We also don't know what will happen with Albinder Dhinsa. He's the guy who started Grofers, now called Blinkit. Blinkit and Zomato have very close ties. And here's where they are. Albinder Dhinsa, the guy who started Blinkit, his wife, Akriti Chopra, is a co-founder at Zomato. So we have to watch out and see how this pans out. Having said that, this is also not the first time that Zomato attempted to buy out Blinkit. Earlier when it was called Grofers, it again had tried during COVID-19. It didn't work out. This time, however, it has worked out. We're told Blinkit shareholders have blessed the deal as well. They discussed the deal terms. So tomorrow will, of course, be a big day where Zomato will announce this deal after signing it, after the board approves it. So stay tuned to ET Now. We've been right on top of this story, and we'll get you the best of analysis as well.